Okay, folks, welcome back to the channel. Here we have the USD CAD. So the CAD was something that people were interested in me going over. So this is something that I am going to be going over in today's video. But just before we start, we just want to give a quick announcement saying that we currently have a 30% off the current mentorship at Liquid FX. So if you use the code Easter Sale, Easter Sale, that will give you the 30% off. So this involves free one-to-one session with myself, the entire ICT Simplified Trading course, and daily Q&A one-to-one commitments you're going to have from me to allow your trading to get to the next level. So if you're interested, use the code Easter Sale to get yourself a 30% off all potential packages we offer at Liquid FX. So with that out of the way, let's now go back to the video and look at what we have here on USD CAD. So this is, like I said, of course, the USD CAD over here. And so what am I expecting, right? So what we have over here, this is the weekly time frame, right? This is the weekly time frame. So we've had a break of structure over here dating back to 2009. So this is here as our break of structure now. Now, since then, what we've had over here, if we zoom into price here, we've had a massive range. But of course, we have this weak high over here, right? So what makes this a weak high? So if you notice, the low was all the way sort of down here in this region. We have a high that hasn't really achieved anything, right? So what we have over here is we have a high up here that drove price down, that really drive price down. But since then, we haven't actually seen price commit. We've seen price disrespect that push down, and has since then been heading higher and higher and higher and higher. Now, from here, this automatically, from an ICT perspective, becomes buy side liquidity, and therefore becomes the DOL, or the draw on liquidity. So this is a draw on liquidity simply because it's a weak structural high. So this high here is deemed as weak. So this is a weak high in the markets, a weak structural high. And so because of that, it becomes targeted. So now if we go down to the daily time frame, we can begin to dissect how I'm currently looking at daily structure, very similar to that of the weekly time frame, right? So the way that I'm looking at the daily structure is that we had price printing us with a high all the way up here, and this high hasn't really committed to making any new lows, right? We just see price heading lower and lower, but we haven't broken the low that was established over here, right? So this is the current situation of USD CAD, right? Giving us a high and a low like this. And so from this region, you have to ask yourself, where are the inefficiencies? Where are the draws on liquidity? So let's really dive into price. So we have over here something which I don't always like to trade. We have a range over here. We have price giving us a range over here, right? So what we had over here is we had some inefficiencies to the left, right? So we had an inefficiency over here, just over here, inefficient price action, and we had inefficient price action. We also have a ton of trendline liquidity that's formed over here. So this is buy side liquidity, or trendline liquidity is how some people like to call it, and it's simply an area that the market will gravitate to using the rules of IPTA, right? So IPTA, or the interbank price delivery algorithm, will seek two things. It will seek fair value gaps, because this is a fair value gap over here. This is a zone in price that leaves a fair value gap, and it will sweep liquidity, right? So the red line here represents trendline liquidity specifically. And so now if we go down to the most recent price action over here, we have price mitigating this zone over here. So we have a very large range over here in price. So currently on the USD CAD, am I bullish or am I bearish longer term? Right. So the first thing I want to draw to people's attention is the idea of pricing on the daily. Now we need to understand that this is our daily equilibrium level just over here. So around about the 1.329 level, right? So we have 1.329 over here. 1.329. This is our daily equilibrium. And so because of that, it's led to this range over here, this not so lovely range that a lot of people would struggle to trade with, including myself. When we have a range over here, this is what makes the market less likely, harder to trade and harder to predict. And so because of that, we need to really dial into our concepts of liquidity to understand how this is going to work. How can we fine tune ourselves to understand this, right? So again, just looking internally, just looking at the internal daily structure, right? This is a good lesson that I would like everyone to really buckle down and understand. When we look at our internal structure over here, we have something like this. We see price giving us a daily chalk from this level, right? So we see price printing a low, and from here price printed an internal high, and then another high. So it's important to understand, right? We saw price retrace from this low going higher. Now, when we got to this high over here, what did this high actually produce? Price from this high did try to drive down, but was it successful? Did it take out this low, right? Did it actually take out this low? The answer is no, right? So what we have over here is we have a weak high over here. So this is a weak structural high in the markets, a weak structural high. And we denote that with this red line, or like I like to call, like from a lot of my previous videos, a DOL, or a draw on liquidity. This is important to understand. A weak structural high represents a draw on liquidity. So what I do expect from the USD CAD is for price to do something like this. I expect this high to be taken, right? So I expect higher prices up to the 1.39 level, 1.39, 1.391. So if I just label that for people, just so they have sort of a higher time frame signal, I expect price to get up to at least 1.390, roughly this sort of level over here. And the reason for that, like I'll repeat quickly, is because we have a draw on liquidity, right? This is the next draw on liquidity. And the reason for that is simply because this high over here hasn't actually made a new low. Price has failed to make this new low and has since then pushed up. So the overall target is to sweep the liquidity lying above this high. Perfect. So that being said, we're going to notch down one more time frame and see how we can use the 4 hour to our advantage, right? So the current 4 hour structure is been labeled something like this, right? So what we had over here is we had price delivering a sequential movement of highs and lows and highs and lows and highs, and this high over here produced that new low, right? So we're currently dealing between this swing high up here. So what we have over here is we have price giving a swing high up here. This is a structural high, and this then of course becomes our structural low. And so because of that, what we have over here is we have two zones we need to look at, two potential zones in price. What we have over here is we have a premium up here. So anything above the 50% level becomes premium, of course, as we understand, and anything below that becomes a discount. Excellent, right? So what do we have over here, right? So if we were to go down to the 15-minute time frame, which we're not going to over here, what we had over here is we had price giving us a H4 change of character round about this level over here. So this movement over here gave us a H4 change of character, and since then we've had price heading up, creating those internal H4 highs and lows. We see price giving us a very steady diet of new highs and lows and new internal highs and lows and new highs and lows. And now we've seen price giving us a new high, just like this. So what we have over here is we have two potential zones up here to target, two POIs, two POIs. Now what makes these POIs? Very simply, we saw price break structure, right? So we saw price giving that shifter market structure to the left. We saw price leave a fair value gap, and we saw price we see these POIs being priced in the premium, right? So this gives us reason for higher prices on USD CAD, right? Because what we had over here is we had price break structure over here, right? So we saw price give a clear breaker structure just over here. We see the inefficiencies being above that 50% level, and we see fair value gaps just over here and just over here. So my overall narrative for USD CAD, for those who are interested in higher time frame outlook specifically, is number one, we have a huge pool of liquidity that's been generated over here. So if I zoom into price for you now, yes, we're in a range, but what does all this here represent? This here represents, you guessed it, buy side liquidity, right? We have a huge pool of liquidity over here, but more importantly, we have a fair value gap just over here in this region, right? So I do expect price eventually to get up to the zone of the price point of minimum 1.368 going into the next week. But overall, my eyes are set all the way at the price point of 1.390. So this is my overall outlooks on the USD CAD. So if you like this video, give it a like and thumbs up. Remember, at Liquid FX, we're offering free one-to-one sessions for anyone who is interested. Remember to download the free ICT trading guide and lots more videos and resources that will be dropped from Liquid FX, right? So keep your eyes peeled on the channel for much more.